Welcome to the DTOS News Desk. My name is Mark Morell and I'm your host, taking you through this week's Let's Talk About series, where we bring your attention to the China-Africa trade route and the agreements established between China and Mauritius. With me today from Intertrust Group, the commercial director based in China, is Mr. Felix Deng. Will you give us a wave?
Thank you, Mark. Hi, everyone.
And the head of the China Corridor for Southern and Western Africa at Standard Chartered Bank is Lydia Zhang.
Hi, everyone.
And our very own Natalie Daines from DTOS Group, who is the head of international sales and networks.
Hello, everyone.
So just before we get started, what I'd like to do is obviously just explain that we have done this as a webinar in Mandarin before. And so this is our response to an English version of this information. We found it very valuable, and obviously our audience has found it very valuable in the past. And so we wanted to bring this through in an English version to help create clarity around how best to conduct business from China through into Africa, through Mauritius into Africa. So Natalie, why don't you give us an overview about DTOS Group and the China-Africa trade route?
So DTOS is a leading management company headquartered in Mauritius for more than 25 years. We are providing business solutions to clients worldwide. We have a strong delivery capabilities in Mauritius, but also in Africa and the Middle East. Mauritius has a political and social stability. It's a free economy with free flow of capital. Legal system is close to the UK one. Geographical proximity with Africa. We have a sophisticated banking system. Lydia will talk about it later. We have 23 banks in Mauritius. Mauritius also has a good knowledge of Africa, and Mauritius speaks English and French. There is no visa required for Chinese nationals to come to Mauritius. And recently, Mauritius has launched the premium visa to facilitate people who would like to come for a year to work in Mauritius.
That's great. So you kind of get to test drive Mauritius as a destination, as opposed to having to apply or just come on like a week's holiday, which is quite helpful.
Exactly. Okay, so the ease of doing business in Mauritius, there is no foreign exchange control. As I said, it's free flow of capital, meaning you can open a multi-currency bank account as well. There is no capital gains, no withholding tax, no foreign investment restriction, meaning that foreigners can own 100% of the shares in a structure. Possibility as well to acquire property for foreigners for both residential and business purposes. Mauritius has the best country rating in Africa for ease of doing business, indexed according to the World Bank. I would like to talk now about the treaties signed by Mauritius. Mauritius has signed different IPPA, investment promotion and protection agreements, and also some DTA, double taxation avoidance agreements with several countries in Africa. And more recently, since January 2021, Mauritius signed the free trade agreement with China. The FTA will benefit from immediate duty-free access on the Chinese market on 7,500 products in 40 different sectors.
Sure.
To complete this route, Mauritius has also signed the African Continental Free Trade Agreement. These two major agreements will boost bilateral trades and provide new opportunities for Chinese investors and exporters, of course, who will be interested in using Mauritius to reach the South and East African markets. Let's also remind that Mauritius is also a member of COMESA, the Common Market for Eastern and Southern Africa, and the SADC, the Southern African Development Community markets, the largest region trade bloc on the African continent, representing a market of more than 400 million people. I now give the floor to Felix, who will give us more insights of the way to invest and using Mauritius.
That's awesome, Natalie. Thank you so much for that insight. I think it's very important for us to remember just how big that scope really is. And so, Felix, we hand over to you for your side.
Okay. Thank you very much, Mark and Natalie. So let me briefly introduce myself and my company. I'm the commercial director and the head office of Shenzhen in China. So basically, my job is to take care of the inbound investment from overseas to China, as well as Chinese outbound investment across the border from Asia to Europe and the US and Africa as well. So Intertrust Group is one of the leading service providers specialized in the corporate services, trust, fund administration, and capital market across 40 offices all over the world. So in China, we have 4 offices. One is in Beijing, one in Shanghai, Guangzhou, and Shenzhen. So that's a brief introduction about who we are and what we do. And today we're talking about most common investment structures into Africa via Mauritius. So if the first one is the China invest directly into Africa, there's a lot of companies that do this type. And of course, the second one will be the China investment into Hong Kong and via Hong Kong into Africa. The third one is China invests into Hong Kong, then invest into Mauritius, and then into Africa. The last one is China invests into Mauritius and into Africa. So that's the 4 major investment structures we see from the Chinese investment into Africa. The reason why there are 4 investment structures is because the consideration of tax between the jurisdictions. Of course, also involved into the different sectors and also the purpose of financing as well. So the jurisdictions among Hong Kong and Mauritius, because the Hong Kong, a lot of Chinese state-owned companies, private-owned companies, they use Hong Kong as the regional headquarters or the treasury center for the Chinese outbound investment. And also they can use Hong Kong invest into different jurisdictions, including Mauritius as different investment destinations. One of the reasons they use different structures via the Hong Kong or Mauritius together is because the substance, they will consider how much substance they will need to put into the structure. That depends on the tax planning from the tax advisor. And also the most important factors will be the local directors, whether you will put local directors there, how many directors you put in there. And also the board meeting, if you need a physical board meeting in the jurisdiction, and as well as the local employees payroll there. So that's what we see the most common way in terms of the substance.
Well, that clarifies that. Thank you so much for that input. And I think I've always questioned as to why you have different structures and different routes, and you brought some clarity around that. Over to you, Lydia. Won't you give us more insight from your perspective?
Thank you, Mark. Thank you, Natalie. Thank you, Felix. I'm actually very honored to be here. Thank you for having me. From a Standard Chartered perspective, we have been in business for more than 150 years in the world's most dynamic markets. China Corridor business has the group's most focus and high expectations for growth in the bank for the past few years. We have invested a China Corridor team in Africa on the ground in most of our presence countries. So today, I'd like to take you through the capability our bank has in Mauritius, especially the value add we could do for our clients in the trade and FX, especially the risk management areas where we could add value. If we look at our capability in Mauritius, from a foreign currency risk management perspective, we have ability to trade 14 major Africa currencies, and we could trade all the G10 currencies as well as the major Asian currencies in Mauritius. With these, we have very dynamic, actually structured solutions to cater or provide solutions for clients' FX depreciation risk, as well as some markets they have liquidity risks in their specific onshore market. And we could, if the client has a fixed payment date or obligations, we could provide them with solutions such as FX forward, as well as cross-currency swap. If they do not have, if they have some uncertainty in terms of their repayments or uncertainty in the receivables, we could couple it with a non-deliverable forward. I do not want to bore you with the details of these. I just want to give you a flavor of what we could help our client with. So please give us a shout if you think we could add value anywhere to any clients. And we all know that Africa is a continent with many resources, many mining capabilities and commodity related risk that client could be exposed to. We have solutions in Mauritius as well. We have a very capable team that could manage the commodity risks that they could face, whether it's precious metal, whether it's copper, whether it's base metal. We have a capable team that we could consult on. The last area I want to touch on is the trade finance or the trade solutions we could help our client, because back to Natalie's topic, we're talking about the China-Africa Free Trade Agreement. Trade and also the Treasury Center being set in Mauritius could add immense value for clients. And that, from a banking perspective, comes down to a suite of solutions we could provide, whether it's trade procurement center set up in Mauritius and taking advantage of the trade agreement, the IPPA, as well as the financial liquidity in the market that could benefit clients from their trade finance cost perspective. And also, if we look at a currency or treasury center that I've touched on earlier, we could have capability for many currencies and be the central point of a treasury center in Mauritius. I'll leave it at this at high level like this, but welcome to consult us when there is opportunities to discuss further. Thank you.
Lydia, I have a question for you. In terms of sustainable financing, what does Standard Chartered do in this regard to help facilitate that with your clients?
Thank you, Mark. This is a great question, actually. We have a very big drive in the bank now across our global presence to promote sustainable financing. In terms of that, we actually promote the green projects, the sustainable projects, and have a huge drive. How does we as a bank to promote and enable some of this project financing happening. But also, it's not limiting to one aspect. We are trying to tailor match our product and solution into extended to trade, extended to the risk management product we can have to minimize the client's risk when they come to sustainable financing projects, as well as help them to structure solutions that could have a cost benefit. Sometimes those cost benefits are the enabling factors for a project to happen. So these are definitely on top of the agenda for the bank.
Great, thank you. Felix, just a question for you, if you don't mind. I'd just like a bit of clarity for me and for the audience. Is the structuring of setting up through China, Hong Kong, Mauritius, and then into Africa? Could you just bring a little bit of clarity around where the taxation sits, and sort of which country does the taxation sit? And in terms of the structure, what would be some of the compliance challenges that you would face?
Okay, thank you very much, Mark, for the question. It's definitely the very important common questions that has been raised by the Chinese investors here. As you mentioned about this structure, the Hong Kong has been always the outbound investment platform as a treasury center. Easier for the private-owned company or state-owned companies to arrange the funding as well as the financing from that jurisdiction for the outbound investment. And as Mauritius is the gateway investing to Africa, so there's a great double tax treaty agreement among the African countries and Mauritius. And we see a lot of Chinese investors using Mauritius invest into Africa. So with the compliance requirement from the OECD in terms of the transparency, there's a lot of additional regulatory compliance filing happening in both Hong Kong and Mauritius. For example, one of them is the UBO, ultimate beneficial owner filing to the local jurisdiction to know who is really behind the investment and where the money is coming, whether they are clean. So in addition to the compliance requirement, also the substance requirement is quite important as well. In order to benefit the tax in Hong Kong and Mauritius, there's some additional requirement in terms of the numbers of the directors, how many of them, particularly the local resident director, how many board meetings needs to be organized in each jurisdiction. So sometimes client will ask how many directors or how many board meetings will be reasonable. That really depends on the investment into specific country related to the sector, as well as the tax advice from the tax planning. I think one thing I probably need to give a little bit more details is the compliance, because the investment from China via Hong Kong, Mauritius into Africa, from the corporate service provider perspective, as well as the bank perspective, the compliance is never once. They would be divided into two parts. The first one is the initial compliance setup. So we will need to basically understand the business rationale, the source of wealth, and also the ultimate beneficial owner, as well as the directors. So this will have the initial compliance check before the investment project kickoff. And once the compliance is completed every year, according to the global, the international compliance requirement from the OECD, we have to have ongoing recurring check and annual file review every year. So we need, even the initial setup, there's no problem, but we never know if there's any ongoing issues happening. For example, the sanction, because we saw some of the investment, they raised some sanctions, and it will affect the whole investment line to make, so for the compliance perspective, I think it's not only initial set up, but as well as the ongoing annual check.
So, Natalie, from a DTOS perspective, DTOS can be seen as pretty much the glue that holds it all together, that brings everyone together. From your perspective, how does that look for Chinese clients?
Thank you, Mark, for the question. I believe that DTOS is really helping clients to coordinate between the creation of the structures, the choice of the structures, the tax advisors, the legal advisors, but also the bankers. So basically, we coordinate between Intertrust when the clients are I give an example. Let's take a case study. From China would like to go outbound and do a huge investment, let's say in mining sector in Africa. They will probably go to Intertrust and ask for the creation of the structure or to ask for an advice for the structure. So then from the Felix will handle the file to us and we will advise them how to structure in Mauritius and which structure is the best one to invest into Africa.
Felix, just a last question, just a last remark even. When clients are looking at the return on the investment and looking at their dividends, essentially, what are some of the realities that they face when doing so?
When Chinese client come into Africa, they probably only think about initial stage, about setting up the structure. And then when they really have landed in Africa, they have more consider, for example, how they're going for the ongoing investment, for the dividend repatriate or the capital gains when they dispose of the asset there. So we can give them the support and share the knowledge experience throughout the whole investment life.
Yeah. Can I add on to Felix's comments?
Yeah,
Standard Chartered has a long presence in 15 of the African countries, and we have strong local expertise. During clients' investment decisions, as well as their operations in country, we could be their trusted local partner in this whole process. So in terms of country regulations, in terms of local practices, as well as their on the ground detailed finance needs, we will be there for them.
So that brings us to a closing with let's talk about the China-Africa trade and investment routes today. And we trust that this has brought some clarity around this topic. If you would like to learn more about investing from China through Mauritius into Africa, please look at the details below in the comments below, or leave your comments below, or you can contact us on info@dtos-mu.com, or feel free to follow us on social media to stay up to date with our regulatory news and information. Thanks a lot to our panelists who have brought us some clarity around this information today, and we'll see you again soon.